This is Mark Anthony with Mercury Time Price Analytics, and we've got a very special video for you tonight. We are so thrilled to be rolling out our Bitcoin trading algorithm. Um, we've had this system in development and testing for several months. It was ready to go several months ago. We wanted to wait until after the new year to launch the Bitcoin platform. We already have incredible systems for ESNQ bonds and crude oil. And our newest one is Bitcoin. And the reason we built a Bitcoin algorithm, if you talk to anybody that has casually traded Bitcoin or folks that just have an opinion about Bitcoin, they'll tell you that it's random, that it can't be traded, it's random. That is absolute nonsense. I could not disagree more. Technical analysis works. Now, more accurately, I'm talking about algorithmic analysis because algorithms they're all about math. Math can be applied to anything. It's all around us. Everywhere you look, you have math. And so mathematical algorithms, when properly constructed, are demonstrated in no better place than Bitcoin. A properly constructed algorithm could trade widgets. It could trade tulip bulbs. It could trade anything because it's all based on the math. Now, what's unique about our algorithms is they are heavily, heavily weighted to time. And the reason that you have to, if you're properly going to build an algorithm that's repeatable, that's consistent, that's profitable, it has to be anchored to time. Why? On the vertical axis, we have price. Now, hypothetically, the price scale goes from 0 to infinity. Well, how in the world are you going to build anything that's repeatable on price? You can't. And that's why most trading systems don't work, because all they're focused on is price or some type of technical pattern that's expressed mathematically. Look, the reason that our systems are to the tick accurate day after day after day is because they're built on immutable time cycles. Look at a clock. It's round. There are the same number of minutes, seconds, and hours in every day. There are similarly the same number of minutes, seconds, and hours in a trading day. Now, today on the 20th, when I'm recording this, it was a short day session. But I'm talking about in a regular session where you've got the day session and then the Globex session. Everything trades on specific time. And it's the same every day, Monday through Thursday. Friday, of course, you have the end of the week, and then Sunday it picks up at 6 o'clock Eastern time. But when you properly anchor algorithms to time cycles, and I'm not just talking about, a count or DeMark or things like that. Those things work. But I'm talking about there are immutable time cycles that are embedded in everything that trades round the clock. Now, if we were to build an algorithm on something that, let's say it was an equity that just trades from 9:30 Eastern to 4 o'clock, it would be very difficult to build because you don't have that time anchor. And so now that we have trading around the clock, folks that know algorithms, especially time algorithms, can build incredibly precise systems. And what's great about our algo is that we have a swing trading algo and we have a day trading algo. So it doesn't matter what your trading style is. Now, what I've got on the screen here is our swing trading algo. And for our subscribers, we have a live chart feed on Zoom. And let me just pull this chart back for a minute. Because on the live chart feed that our Bitcoin subscribers get, you've got the day trading algo on one side, and you've got the swing trading algo on the other. And so you have them both on your screen at all times. It really doesn't matter what your trading style is. If you're somebody that doesn't want to carry risk into Globex, that doesn't want to go to bed with risk, well, we've got our day trading algo. And so whether you're a swing trader or a day trader, we've got everything for you, and not just an algorithm that provides long and short entries, but we have a system of mathematical pivots that is unlike anything else, and I'll get back to this in a minute. So let me go back over here to the full chart of swing trade, and I can pull this chart back and show you example after example after example. But here you have a short entry at 83.60. And then the algo goes long at 78.45. And it stays long all the way up into this congestion pattern up here. Now, what's unique about our systems is not only do we have the algorithmic system for entries and exits, but we have what we call profit capture pivots all the way up. So if someone's in this long from down here, you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 algorithmic pivot levels with which to take profits. And so when you get into a trade, you can take your profits and you know that the trade is working because it starts taking out pivot after pivot after pivot. One opens up another. Now, to show you how accurate the pivots are, and we'll get into the oscillator here in just a minute, but we never put hand-drawn support and resistance lines. Computers can calculate support and resistance much more accurately. Now, there's actually a very important third type of algo. Our algos are designed to find support, resistance, and also to perfectly bisect price congestion areas. And so if you pull the chart back, you can see where the profit capture pivots are pulling this data from. So when I talk about the pivots, I'm talking about these horizontal lines. And then here's the algo, the long short entry algo. So we'll just take this pivot here, this X1 pivot. It's pulling from this area here, came up, came back down, and right there it defines it to a T. And then you've got this algo here. Now look, you could look at this and say, well, that looks like, you know, support. Well, we don't have to look at it and say, well, it might be, it may be, it could be. The algorithm cuts right through this area that was resistance that turned into support. And down here are Mercury band lower extension 1. You can see where it's pulling that from, right here. You can see where the Mercury band lower extension 2 is pulling from. Cuts right through this congestion zone and resistance that then turned to support. And so on and so on. And so when we zoom in on these algos, the profit capture pivots I'm talking about, they are incredibly precise. And you'll see price go down to the tick over and over and over and over and over again. Now, I'm going to talk about the pivots in just a minute, but first let me talk about the algorithmic oscillator. When you look at this, you might think that these are just some type of moving averages or exponential moving averages. They're not. This cyan line is our proprietary algorithmic momentum indicator. We designed the graphical interface that the traders use to look and feel like a moving average, because that's what everyone's used to. Everybody has traded with some type of moving average or exponential moving average on the chart. So that is the graphical metaphor that we use. Now, for every price bar, it doesn't matter whether it's the swing trading chart or the day trading chart, for every price bar, there are 2 white dashes. And that is our proprietary volatility algorithm. So when the algo triggers, like in this case, a long, what it does is it shows you the point at which momentum has changed directionally. Now, there's only 3 directions that momentum can change. Momentum can be going down and turn up, as in the shape of a U. Momentum could be going up and turn down, as in the shape of an inverted U. Or momentum could be going horizontally, and at some point, consider a fork in the road, it's either going to turn up or it's going to turn down. And so the entry algorithm consists of 2 pieces. The momentum portion, which is this cyan line. And the way the system is triggered, and what's beautiful about this is it is so easy to interpret. And it works perfectly on a live chart. You don't have to have software. You go to Zoom, you put in that particular day's live chart code, and you see this on the screen. More accurately, you see this on the screen. swing trading algo, day trading algo. So there's two pieces to our triggering mechanism. When we get a directional change in the momentum algo, and again, there's only three types of changes. It either is changing from down to up to down, or it's going sideways, and at that point it comes to the proverbial fork in the road, metaphorically speaking, and it transitions either down or up. When you get a directional change in the momentum algo, it simply puts the system into the ready state. It doesn't do anything yet, because the long is only triggered when the white volatility dashes cross from under to over in the case of a long, or vice versa in case of a short. And here's what I mean. Imagine, just purely from a pragmatic perspective, if your trade is on the correct side that momentum is going, either up or down, that's half the battle, right? But what makes our system so accurate is it gets you into the trade at the precise point that volatility is compressed relative to volatility before or after. And let me stop for a minute, because traders are conditioned to think of volatility in absolute terms. And I'll give you an example. If you've ever traded ES or any type of equity future, you know what the VIX is, the volatility index. And as VIX goes up, it's an inverse relationship to ES. As VIX goes up, ES goes down, and vice versa. So imagine that the VIX in ES, I know we're talking about Bitcoin, but I want to put this in perspective. Why absolute volatility means absolutely absolutely nothing. There you go. What's important is volatility relative to what it was right before and right after the point you get into your trade. Let's say you're trading ES and VIX is 12. That's a low reading on VIX. Now, 13 is a low reading on VIX also. But if VIX goes in the period of, say, an hour from 12 to 13, is that going to move ES? You better believe it. And so VIX is important only in relative terms. And that's what the system does. Now, what happens is at the precise point that you get the crossover, in the case of a long, of the volatility dashes from under to over, it is at the point where volatility is compressed as much as it's going to be relative to that particular point in time. And I'll show you what I mean here. You have the momentum indicator going sideways. And look, if you're building something on price, you're getting whipped up and down, in and out. But through this whole thing, even though it looks like price is choppy, the momentum algo is just going sideways. Nothing is happening from an algorithmic perspective at that particular time. Now, once the momentum algo starts to change its orientation, in this case from sideways to up, what happens at the precise point that we get in, which is, where is it, right in here, is that the volatility dashes have compressed as much as they're going to. Remember, for each bar, there's two of them. And as these dashes expand, that means volatility is expanding. And if we look over here, the algo's in a short. Momentum is going down directionally. It changed from an upward bias, rolled over, and went down. And notice what happened just at the point right before the trade was triggered. These two volatility dashes mesh almost to become one. And that is exactly what happens here. So when the algo triggers by this, what looks at the time like a very subtle increase in momentum, you have the volatility dashes cross from under to over, and the volatility dashes are completely compressed. So if we were looking at this same thing, with VIX as the volatility component and ES as the instrument rather than Bitcoin, it doesn't matter at this point in time whether VIX is 12, 18, 20, 24, 20, it doesn't matter. What only matters is that volatility is expanding right at this point where you're getting into the trade relative to the compression of volatility before you got in the trade. Now think about this again from a pragmatic perspective. You've got the direction of momentum right. It's going up relative to what it was in this big area. And you've got volatility as compressed as it's going to get in this construct right here, expanding right after you enter the trade. And that's what makes this algorithm more accurate than anything that I've ever seen. Now, imagine that you're trading price in this congestion zone. Do you buy this green wide range bar? Do you short this red one? Do you buy this green one? Do you short this red one? Do you buy these two? Well, here's the big move up. No. So are you buying these two long green candles, or are you shorting this red one? Or are you really shorting this one? Now you really bared up. Or do we short this one or this one or this one? Well, the algo doesn't care about any of this because the algo is analyzing time, price, and volatility hundreds of times per minute. And so when the trade is properly cooked, meaning you get an appropriate change in directional momentum, along with an expansion of volatility in the same direction, that's what triggers the trade. And that's what gets you a system that does this. Short at 83.60, long at 78.45, all the way up over 8,800 from a long that started 1,000 handles lower. And that's what the system does. And even when you get into these congestion zones, short here, long here, short here, long here. Can you make money on a trade that gets you long here at 87.47 and goes up and prints over 9,000? Sure you can. Was this a massive move higher? No. Was it as big a move as you had here or here? No. But if the algo is triggering at these specific times, even a reasonably small move is going to be profitable. Why? Because if the algo triggers here at, call it 87.50, well, look. Sorry about the notifications, folks. But if the algo triggers long here at 87.50, you've got 1, 2, 3 of our proprietary pivots at which to take profits. And so even with these moves up and down in this congestion area, the algo still makes money. Why? Because of the beautiful harmony of the algorithmic entry system and the proprietary pivots. So we've got pivots that are called Mercury bands. We also have this little thing called the single daily algo pivot. And to show you that better, let me flip over to the day trading chart. So here's our single daily algo pivot. And this magnetizes price every single day. And so you've got the combination of our Mercury bands, and the way the Mercury bands work, let me just go over here a minute to explain this. We'll use the metaphor of Bollinger Bands. With Bollinger Bands, you've got an upper band, a lower band, and a mid band, right? Well, the main part, the body of our Mercury bands, is an upper level, a lower level, and 2 mid bands. And then the algorithm also puts out either 3 or 4 upper extensions and 3 or 4 lower extensions. Now, we only need to update these Mercury bands once a week. So over the weekend, we update this, and those Mercury bands apply all week long. And if I go back to the chart and pull this back out to this version, which is the one that has the Mercury bands, and I'll pull this out just a little bit wider. So here you can see, and I want to go back here just a moment so this makes sense. There's short cycle Mercury bands and long cycle. Now even the short cycle is many days. The long cycle just happens to be a whole lot more days. So just the body of the Mercury bands, you got the upper band, the lower band, and the 2 mid bands. That gives you 8 levels. Plus you have either 3 or 4 upper extensions and lower extensions. So now that you've seen that twice, this will make more sense. So here's our Mercury band short cycle upper. The upper and lower levels are shown as solid lines. So the short cycle is in cyan, upper, lower, and then here's your mid 1, and here's your mid 2. And then the longer cycle is in green. Again, same metaphor, upper and lower are solid lines. There's your upper level, your lower level, and your 2 mid levels. Now you combine that with our single daily algo pivot, which today was 87.23. So that gives you 2 sets of algo pivots. And then we have the secret sauce, which is called our X5 pivots. As you might imagine, there's 5 of them. Here we go. These X5 pivots are the single most accurate intraday pivot system that I've ever seen. So you've got 5x5 pivots. That's redundant, but you've got 5 of them. Now every morning at 10 o'clock we run the algo, and that generates a new x5 pivot for that day. And then the previous day, they all move down 1. So the previous day's x5 moves to x4, the previous day's x4 moves to x3, previous day's 3 goes to 2, 2 goes to 1, and the previous day's x1 pivot drops off. So it's a running 5-day cycle. So this is incredibly powerful time cycle analytics just built into this. We give you so many systems, it's ridiculous. You've got the Mercury bands, you've got the X5 pivots, you got the single daily bull bear pivot. Now, if this was all we gave you, I guarantee there are folks that sell subscriptions to nothing more than pivots for Bitcoin. Well, I'm a visual person. This is great, but it's hard for me to trade off a spreadsheet. So here's what we give you. We give you the live chart that has the algorithms running through the chart and the pivots as fixed points at which you can manage the trade, manage your risk, and take incremental profits on the position. And because of that combination of what I believe, and I'll believe this until I see something that proves me wrong, it gives you the combination of the most accurate algorithmic long-short entry system there is. And it gives you the flexibility of whether you're a day trader or a swing trader, you got them both on one screen. And the combination of the algorithm for the entries, long and short, with the algorithmic profit capture, risk management pivots, there is nothing like this. And the beauty of this, let's say and I'll give you an analogy with ES. Let's say you're trading a 3-lot of ES. We recommend trading in thirds if your account's big enough to support it, because when you're trading in thirds, it allows you to take your first third as that position starts to become profitable, and then adjust your stop either to even or close to even. So if that thing completely whips around in the other direction, at least you've booked that first third. After you book the first third, then you look to the point where you're going to take your middle. And after you take your middle, then you have your runner and you let it run until you decide you're going to take it off. So if you're in a short from down here, for example, you could take your first third up in here, your middle in here, and then let the runner run. Now, again, you can't trade in thirds if your account doesn't support it. And the way to determine appropriate risk size isn't just to look at how many contracts your broker will let you put on. That's not proper risk management. So as an example, and we'll just use ES, let's say you're trading the E-mini. And if your account is just barely large enough for you to have the margin to trade a 3-lot, you absolutely don't trade a 3-lot. Just because your broker will let you doesn't mean that that's appropriate risk management. So what I'm saying when I talk about in thirds, it means you have to have an account substantially larger or big enough that you're able to absorb a drawdown without severe impact. Because look, if you're trading a 3-lot, and you have a drawdown, well, now you can only trade a 2-lot. And then you start trading more aggressively and revenge. And that's not to get off on a tangent, but that's why appropriate risk sizing doesn't mean, well, how many contracts will my broker let me put on based on the margin requirements? It's not the way risk management works. But the beauty of being able to trade in thirds, if your account is large enough to do so, is because it allows you to take the first third, move your stop to even or close to even, so that if you get a reversal, you still book that first portion of the profit, and then look for a place farther along in the trade to take your middle, and then let the runner run. We provide a 7-day free trial, and we do some things that very few companies do. As a matter of fact, some of the things that we do are so skewed in the favor of our customers that if we were just submitting a business model, they'd think we're nuts. We give you a 7-day free trial. We bill weekly, not monthly. Why? Because we believe in these systems. I thought I had these turned off, forgive me. We believe in our system so much that we want people to be able to cancel anytime they want. In other words, if you have any type of subscription, they usually bill monthly. Well, what happens if you change your mind 2 days into it? Well, then you're stuck paying for the month. And we don't do that because we don't have to, because there is nothing this accurate. And so we give you a 7-day free trial. We bill weekly, not monthly. On one hand, we lock in your rate for life. So no matter what the rates go to in the future, whatever rate you subscribed at is your rate for life as long as you want to keep it. So we give you that assurance that there's not going to be inflation in the subscription price that you originally subscribed to. But yet, on the other hand, we'll let you cancel any week. So that should tell you a little bit about not just the way we run our business, but how much we believe in what we do, because we have yet to see anything that is nearly as accurate as what our algos will do. So if you like to sign up for a free trial, you can go to mercurysignals.com. You can click on the Bitcoin menu item at the top of the page. It'll give you more information about what you get with the package. But just to briefly summarize, you get the live chart running both the swing trading and day trading. You get access to our Slack channel where we post all the pivots. So when these pivots are generated, where do they go? They're posted on the Slack channel. Right after I post them on the Slack channel, I overlay them on the chart so that, and I do have subscribers that will take those pivots and they'll overlay them on whatever brokerage platform or trading platform they like. You don't have to. I mean, you can, but you don't need to because it's right here. The live chart runs every minute that the market is open. And so that all comes with the package. And with the automated oscillator, you get the Mercury band pivots, you get the X5 pivots, and you get the single daily bull bear pivot. And I've got to say that if we did nothing but give you some type of pivot, it's worth a whole lot more than what we charge. If all we gave you was just a single daily bull bear pivot and nothing else, it's worth more than what we charge. But to give you the package of a very, very, very sophisticated long short entry algorithm with the package of pivots that we give you and the live chart and the Slack channel, if you trade Bitcoin, I don't see how you could put it this way. Once you've traded with these systems, not only is it more profitable, but it ratchets down the anxiety level about 90%. Because when you're in a position, you know that as that position starts working, each time a pivot level is taken out, it's going to go to the next one, and the next one, and the next one, and the next one, and on and on and on until it flips and goes the other way. So we thank you so much for taking 27 minutes of your time and watching the video. Again, you can find more information at mercurysignals.com. And you'll find out how to sign up for a 7-day free trial. Look, whether you sign up or not, or whether you're just watching this because you're interested in Bitcoin, we thank you so much for taking your time. God bless you. God bless your family. And we look forward to seeing you again soon.